Hello, everyone, and welcome to today's webinar. My name is Anna, and I'm with the New Mexico Small Business Development Center. Today, we have Peggy McDonough joining us, who's a certified SCORE mentor. Peggy holds an MBA and is a CMA with 30 years of project management and finance experience. Peggy will be presenting Are You Tax Ready? PPP, EIDL, and ERTC Implications. We will be using the Q&A function to take questions and welcome attendee participation, so don't hesitate to ask us any questions you may have. We'll answer those questions at the end of the webinar. If you have any technical issues, I can address those within the chat feature. Thanks so much for joining us, and without further ado, I'll hand it over to you, Peggy.
Thank you. Good afternoon, everyone, and I'm glad to see you're attending, and I appreciate your attendance. As you can see, we're going to talk about PPP, EIDL grants, and ERTC tax implications. As she mentioned, I'm a SCORE certified mentor, and SCORE and New Mexico Small Business Development Center work together in collaboration to provide small business owners with professional training and support. And that's exactly what today's webinar is an example of. And we hope you'll find your time today productively spent and useful for your business. Please do not use the chat function during the webinar because we won't be monitoring the chat. Any questions you may have, and if you can write them in the question and answer feature in Zoom, and if possible, put the slide number on it. And that allows me to find it quickly if there's a particular question on a particular slide. And again, as she said, we will address all questions at the conclusion of this presentation. Now, SBDC is prohibited from giving tax or legal advice. Any tax-related questions, accounting questions, or any specific questions about your individual company situation, they can only be answered with credible authority by your accountant or your attorney. So please keep in mind also the information we're covering today is changing rapidly and is based on a current understanding of the programs. It can and likely will change and has changed throughout the time that I've been giving this webinar, which has been several months. Although we will be monitoring and updating this webinar as new information becomes available, please do not rely solely on this for your financial decisions. We encourage you to consult with your lawyers, your CPAs, your payroll experts, and any financial advisors that you may have. So what are some of the goals that we want to achieve today? Well, I'd like you to walk away from this webinar with a better understanding of the tax impacts for various COVID relief programs that have been signed into law by Congress in both 2020 and 2021. We'll be starting with the timeline, starting with the Coronavirus Preparedness and Response Supplemental Appropriation Act that was signed into law in March 6th of 2020. And we'll be ending with the most recent American Rescue Plan Act, which was signed and extended by President Biden on March 30th of this year. We will also cover the impacts of the infrastructure bill, which was signed into law in early November of this year. You should leave here today with more knowledge and with guidance on what questions you need to be asking your CPA, your tax attorney, or your payroll professionals in order to make the best decisions for your business. So we're going to be focused on three specific programs. We have the Payroll Protection Program, the Economic Injury and Disaster Loan Grants, as well as the Employee and Retention Tax Credits. We're going to be looking at the timeline and the background of all of these programs, as well as the tax implications and frequently asked questions. We'll end today's webinar by addressing any questions that you may have. So let's get started. It's been a long journey. On March 6th of 2020, Congress signed into law the Coronavirus Preparedness and Response Supplemental Appropriations Act. Now, the act declared the coronavirus outbreak a disaster under the Small Business Act. And this opened the door for the Small Business Administration to use its lending authority to make economic injury disaster loans for small businesses that were impacted by the pandemic. Then, just a couple of weeks later, on March 27th, there was the Coronavirus Aid, Relief, and Economic Security Act, and it was signed into law, often called CARES. What CARES did is it created the Payroll Protection Program and provided nearly $349 billion for PPP loans. In early May, Congress provided an additional $320 billion in funding. It also introduced the grant to pay SBA's EIDL applicants in advance on their EIDL loans. Now, these advances were treated as tax-free grants and did not need to be paid back. The funds were exhausted in early July. They went very, very quickly. It also created the Employee Retention Tax Credit, sometimes called ERTC or ERC. The ERTC is a fully refundable tax credit for employers equal to the percentage of qualified wages. Now, this includes health plan expenses that eligible employers pay to their employees. In December of last year, we had the Consolidated Appropriations Act, it's commonly called CAA, and it was signed into law. And inside and embedded in that act was about $900 billion in COVID relief. $300 billion was in aid to small businesses, $284 billion to SBA for first and second PPP forgivable small business loans, and about $20 billion to provide EIDL grants to businesses in low-income communities. In March, just a few months later, there was the American Rescue Act of 2021, and that was $1.9 trillion. It was voted on in March 10th, and it was signed by President Biden on March 11th. Now, among other things, it provided small business assistance, including specific programs for restaurants and live venues. And as you can see, as each of these acts were voted on and approved by Congress and signed on by the president, they became more and more clear and focused on where they wanted the money to go. The very first acts that came out, the CARES Act, for example, very large businesses snapped up all the money very quickly. And that was not what these bills were meant to help. They were meant to help the small business people. So that's why you'll see as each of these acts are signed into law, they become more and more focused on certain portions of small businesses. In March 30th of 2021, President Biden signed the PPP extension law and extended the closure of the PPP till March 30th of 2021. Now, I did include the infrastructure bill because that was passed into Congress on November 5th, and it was signed into law by President Biden on Monday, November 8th. And it did impact the PPP. Basically, what it did and the implications of it, I will get into it with each of the programs because it impacted each program differently. Now, interpretation, well, when all these bills being passed and all of the money that's come out over the COVID crisis, Congress has appropriated a lot of money, and the interpretation of exactly what Congress meant to do with that money is somewhat ambiguous. There are a lot of organizations that are impacted. There's the IRS, the SBA, the banks, CPAs, and of course, business owners. The Treasury and the IRS tax laws have given us tax laws and guidance, but they've lagged. And so they are confusing in some instances. They're contradictory messages. There's new forms, there's new applications, there's confusing interpretation in a constantly changing environment. And this means you're going to deal with business situations and tax implications that you've never seen before. So let's first talk about the PPP, the Payroll Protection Program. Now, this loan is designed to provide a direct incentive for small businesses to keep their workers on the payroll. And this program did end May 31st of 2020. That was when the program ended. Now, a lot of people were hoping that there was a first draw and a second draw, and people were hoping that there would be a third draw because there was still money in the PPP program for several reasons. There was money in the program because there was some fraud that was identified and the money was returned, and they also didn't spend all of the money. So they were hoping there would be a third draw. Well, I'm afraid that the infrastructure bill took all of that extra money away. They swept it up. And you're going to find that they've done that with all of these programs in order to pay for the infrastructure bill. So the impact on this is there will not be a third draw. So right now, the first draw on the loans they were loans that could be used to help fund payroll costs. They include benefits and may also be used to pay for mortgage interest, rent, utilities, worker protection costs related to COVID, uninsured property damage costs caused by looting or vandalism during 2020, and certain supplier costs and expenses for operations. The money was scooped up by large businesses, and that's what I was talking about, very quickly, leaving the small businesses unable to apply. So they had a second draw, and that allows certain eligible buyers that previously received a PPP loan to apply for a second draw with the same general loan terms as their first draw. It also gave more money that people could apply for. As you know, right now, it's no longer, it has ended. The program, as far as the application, is ended, and we are now in the forgivable portion of the program. So this is the loan forgiveness clause. That is the portion of the program we're in right now. So a borrower can apply for forgiveness once all loan proceeds for which the borrower is requesting forgiveness have been used. Now, borrowers can apply for forgiveness at any time up to the maturity date of the loan. If borrowers do not apply for forgiveness within 10 months after the last day of the covered period, then the PPP loan payments are no longer deferred, and borrowers will begin making loan payments to their PPP lender. So to apply for forgiveness, work with your PPP lender. They also developed a few months ago what's called a direct forgiveness portal for participating lenders. And the purpose of this portal was for very small lenders. There's a lot of administrative work in giving out these loans. Although the money comes from SBA, it's funneled out through a lender. And if you're a small lender, local lender, you don't normally have the infrastructure to have a website or anything like that. So in order to give these small banks and lenders a direction to, or some help, in other words, for their administrative burden, the Small Business Administration developed a portal. Now, this portal you can get to this portal on your website, on the SBA website. And if your lender is opted into this portal, you can apply for forgiveness through this portal. Now, the portal is very easy to use. It also gives you the forms that you need, and it also cuts down on the amount of time that your loan can be forgiven. So it's a great option if your lender is using it. Now, you won't find this with the big lenders like Citibank or Wells Fargo. They usually have their own portal. And if your lender is using this portal, they should have given you an email. And if they didn't, there is on the SBA website, www.sba.gov, there is a list of the lenders that are participating in this program. So if your lender is using it, please use this portal. It's a great tool, and it'll get you your forgiveness much faster. The SBA also offers free counseling and training events to help you with the Paycheck Protection Program. Now, the CARES Act spells out that the forgiven loan amount won't be included in taxable income. So you don't pay taxes on the money that you receive. This loan is to provide businesses with the money to keep running and continue paying their employees, and it's not meant to be a tax burden for the businesses that have received the funds. With the passing of the Consolidated Appropriations Act in December, more clarity on how the expenses covered by a PPP loan will be treated. Now, previously, anything you spent your loan on was not going to be tax deductible. Now, these expenses are tax deductible. So simply put, your PPP loan will not affect your tax filing process. Now, historically, if you have a business loan and it is forgiven, that is automatically taxable income, and it has been in the Internal Revenue Code forever. However, with the PPP program, those loans break that code. Congress specified and the IRS clarified that forgiven PPP loans will not count as income. Now, this applies whether your entire loan is forgiven or just a portion. This loan is to provide businesses with money to keep running and continue paying their employees. It was never meant as a tax burden, as I said, for the businesses receiving the funds. Again, simply put, your PPP loan will not affect your tax filing process. Now, though Congress had walked back the IRS's stance on the PPP and its relation to deductible income, that doesn't necessarily mean you can leave those funds out of the conversation on your 2021 taxes. Whether you receive PPP funding in its first iteration or later on in 2021, you should still be careful when it comes to taxes, because there are still a lot of unanswered questions. Now, some of these questions stem from confusion in the PPP application process. In some cases, application woes meant businesses received money that they weren't qualified for in the first place. For example, a company may have stated that it had employees when it only had independent contractors. And while that might seem like a case of semantics to the layperson, that kind of difference could have major implication when it comes time to file your business taxes. It's also important to how your funds are used and keeping that in mind. Any money that the business owner used to pay something else that is not included in the PPP requirements will have to be reported as income and expenses in their business tax return. So please be sure you have clear and concise bookkeeping. Your signed PPP loan contract stated that you would produce monthly government-ready financials. You are required to have bookkeeping in place. If you don't, you could suffer penalties and fines or trouble with an audit. Separate your accounts to identify your PPP loan. For example, other income PPP loan non-taxable. It's important to adjust your tax planning estimates to include any PPP expenses that were formerly non-deductible. Now, if you received a PPP loan, please expect an audit. In recent months, the SBA and U.S. Treasury, they announced that all PPP loans in excess of $2 million are going to be audited. Now, loans that are less than $2 million are not subject to an audit, are subject to an audit, and much lower loans have been and they will continue to be scrutinized. My point is there is a higher probability that the IRS will audit you. And also the IRS has developed a hotline for anonymous callers to report any possible fraud. So how do you help ensure a smooth audit process? Well, please don't procrastinate. Begin compiling your documentation as soon as possible. Keep all your records, your receipts, your statements, your payroll records and PPP documentation should be kept on file for at least 6 years after your PPP loan is fully repaid or forgiven. Make copies to send, but always retain your originals. And please hire a CPA who can represent you and defend your business against the IRS if necessary. So here is a few of the frequently asked questions. Does my PPP count as taxable income? No, as I said, funds from your PPP loan, whether forgiven or unforgiven, are counted. No funds are counted as taxable income. You will also be able to claim a deduction for expenses using your PPP funds. If my PPP loan is not forgiven in full, does that mean it counts as taxable income? As with other business loans, funds from your PPP loan that are not forgiven do not count as taxable income. Can I write off payroll and other business expenses if I used a PPP loan to pay for them? If you received a PPP loan and your loan was forgiven, you can write off payroll and other expenses that were paid for with these funds. Expenses that were not paid using PPP funds can still be written off as usual. And even if your PPP loan was not forgiven, payroll and other business expenses may be written off on your tax return. Can I use my PPP loan to pay business taxes? No. Funds from your PPP loan may only be used to cover payroll costs, utilities, rent, or lease payments, or mortgage interests. PPP loan proceeds cannot be used to pay business taxes. Can I defer payroll taxes and receive a PPP loan? Businesses that have received a PPP loan can still defer payroll taxes through the end of 2020 and 2021. Will PPP loans be audited by the IRS? As I said, yes. According to the US Treasury, all PPP loans that exceed 2 million will be audited. The IRS may also audit all other loans, so it's always in your best interest to be prepared, even if you received a much smaller loan. Now, it varies from state to state, so we know it's not taxable at the federal level. And in some states, it is taxable, and in some states, it's not. Now, we are lucky in New Mexico. New Mexico does not tax forgiven PPP loans. This could be changing, so again, confirm this with your CPA, but this is the most recent information that I'm aware of. So now let's talk about EIDL, the Economic Injury Disaster Loan. Now, the Economic Injury Disaster Loan is a loan option, and it's available through SBA. PPP PPP is funded by SBA, but you work through a lender. With the EIDL, you work directly with the SBA. And though SBA disaster loans, they've been around for available for years. The EIDL for the COVID was signed into law in March of 2020 as part of the CARES Act, which was passed by Congress. If you're a small business, a nonprofit organization of any size, or a U.S. agricultural business with 500 or fewer employees that has suffered substantial economic injury as a result of the COVID-19 pandemic, you also can apply for a COVID-19 EIDL. These loans do not go through a lender. They come directly from SBA disaster assistance, and there is no cost to apply. You can find the information on disasterloan.sba.gov. Now, EIDL is a loan, and it's treated the same way as any other business loan as far as taxation is concerned. In other words, funds from the EIDL are not reported as taxable business income on your tax return. But the EIDL also comes with several grants. Now, the small businesses that were impacted by COVID-19 may now be eligible for what's called a Target EIDL Advance Grant of up to $10,000, as well as a Supplemental Targeted Advance Grant of $5,000. These grants do not have to be repaid. The SBA is encouraging all eligible businesses to apply. Now, the grant program was part of the initial CARES Act in 2020, but funds were exhausted within weeks. So in December, Congress had allocated additional funds for the program and established more targeted eligibility criteria. So to be considered for one of these grants, your business must meet the eligibility requirements and apply or have applied for an economic injury disaster loan, or EIDL. However, and this is important, you do not have to get or accept the loan to get the grant. So do I qualify for a targeted EIDL advance? You need to be located in a low-income community. You need to have suffered an economic loss greater than 30%, and you need to employ not more than 300 employees. In addition, the business must qualify as an eligible entity as defined in the CARES Act. So in the CARES Act, it defines eligibility as a small business or cooperative, an ESOP tribal concern with fewer than 500 employees, an individual who operates as a sole proprietorship with or without employees, or as an independent contractor, or a private nonprofit or small agricultural cooperative. And the business must have been in operation by January 31st, 2020. The business must be directly affected by COVID-19. Now, this is important because this program does end, or the applications will only be accepted through December 31st of this year. So it is coming to an end. This is one program of the three that I'm going to talk about today that the infrastructure bill did not sweep up the funding. So they still have funding. the last I checked, which was a couple of days ago. So if you are interested in this program, I would truly recommend that you get your application in as quickly as possible, so they'll have time to work it through the process, and you'll be able to come in before that December 31st cutoff date. So let's go into a few of the definitions. Exactly what does economic loss mean? That's the amount by which the gross receipts of the covered entity decline during an 8-week period between March 2nd, 2020 and December 17th, 2021, relative to a comparable 8-week period immediately preceding March 2nd, 2020, or during 2019. How do I demonstrate economic loss? Well, getting your business tax documents organized and up to date will be essential to applying for this grant and demonstrating that you qualify. Well, what exactly is a low income area? Now, the SBA has released an online tool to help borrowers understand if they're in a low income area. And please note that the business address must be located in a low income community in order to qualify. So SBA encourages potential applicants to check the map to see if they meet the low income community eligibility requirement before you apply. And this is really a clever little tool that they have again on the SBA.gov website. And all you do is you type in the zip code of the location of your business. It comes down to a street level, and you can easily see whether you are in a low income area. What are the new 5,000 supplemental grants? Well, the American Rescue Plan, it was passed March of this year, includes $5 billion in funding for supplemental targeted advances or grants of 5,000 to the hardest hit businesses. How do you qualify? Well, you have to have suffered an economic loss of greater than 50% and employ not more than 10 employees. And this supplemental grant is in addition to the 10,000 targeted EIDL. The SBA will reach out to small business owners who applied for the targeted advance if they appear eligible for the supplemental grant. So getting your business tax documents organized and up to date will be essential to applying for this grant and demonstrating you qualify. And I would highly recommend that you apply by December 10th. In order to make sure everything gets through the system before the 31st of December. Now, initially, funds from EIDL advances were to be reported as taxable income. This decision was reversed under the Consolidated Appropriations Act. It does not need to be included in your taxable income when you're filing your taxes. Additionally, qualifying expenses can be written off to lower your tax liability. Legislation clarifies that EIDL grants are not taxable at the federal level, that businesses who receive them will not be denied a tax deduction for qualified expenses paid for with those funds, and that EIDL grants will not be deductible from PPP for loan forgiveness purposes. So in other words, you can have both a grant and a PPP loan. They don't step on each other. You can have them both. When this originally came out back in 2020, if you had a PPP loan, you couldn't get an EIDL or vice versa. So this was reversed back in December. But check with your tax advisor about any tax implications at the state or local level. Will EIDL loans be audited? Well, when you received your EIDL loan, you agreed to spend the funds provided for certain business expenses. So as part of your loan agreement, you agree to maintain records and provide these records to the SBA to be audited if necessary. While there is a chance you may not be audited, please don't skip this critical step. Maintain your records and be prepared to respond if an audit occurs. Does a grant count as taxable income? In most instances, grant funds are not counted as taxable income on your federal tax return. How do I qualify for an EIDL grant? Well, if you previously applied for an economic injury disaster loan, you will receive an invitation by email inviting you to apply for the targeted grant. If you have not yet applied for an EIDL, you can do so at sba.gov. If your business appears eligible, you'll be invited to apply for the targeted advance. You do not have to accept the EIDL loan or even be approved for the loan to get the grant if you qualify. What if I never applied for EIDL? If you have not previously applied for EIDL, you may apply at sba.gov. You will be able to apply for the low interest rate loan through December 31st, 2021, as long as funds are available. And again, if it appears your business also qualifies for the targeted advance or the supplemental advance, the SBA will invite you to apply. Can an EIDL loan be forgiven? No. EIDL loans must be repaid over 30 years. Unlike PPP loans, there are no forgiveness process for these loans. And I think these loans are at a very low interest rate, about 3.75. Can I also apply for a Paycheck Protection Program? Yes. Paycheck Protection loans may be fully forgiven if they are spent on certain expenses, which essentially turns them into a grant. And again, note that that program is now closed for applicants, but we're in the forgiven loan stage. However, if your business received a PPP loan, you may still be eligible for an EIDL loan or a grant, and businesses may apply for both EIDL and PPP if they qualify. All right, let's talk a little bit about the ERTC. I think of the three programs, this is one of my favorites. And the reason for that is it's really has a lot of bonuses, and it's easy to apply for. Everybody is eligible for it, or most everybody is eligible for it. And I'll go into some of those eligibility requirements. So if you haven't taken advantage of this, you can also go retroactively back in 2020 and apply for any funds that you felt that you qualified for and hadn't filed for yet. So the employee retention credit is a tax credit first put in place last year as a temporary coronavirus relief provision to assist businesses in keeping employees on their payroll. Since then, the ERC has been significantly expanded, and in the most recent relief bill in January, the ERC was extended for all of 2021. Now, that has changed as of November. The infrastructure bill funding has backed the date to September 30th of this year. So no longer is it available through December 31st. It's again as a way that they were sweeping up funds for the infrastructure bill. There are different rules between 2020 and 2021. And this shows you how much better this particular program became in 2021. So in 2020, you had to have 100 or less qualified full-time equivalents. But in 2021, they upped that to 500 or less qualified full-time equivalents. In 2020, the tax credit was up to 50% of $10,000, and now the tax credit is up to 70% of $10,000. This credit is available to businesses with fewer than 500 employees in 2021 and 100 in 2020, and the suspended or partially suspended their business due to COVID-19 because of a government order. So this is what I want to really hone in on here. You can have or, not and, of both of these requirements. So either you're suspended or your business was partially suspended due to COVID, or your business experienced a 50% drop in 2020 or a 20% drop or decline in gross receipts when compared with the same quarter in the previous year. So there were a series of New Mexico government health orders in 2020 and 2021, and each order was effective for different dates, for different businesses and different requirements. So for details on who was impacted and the dates when the orders were effective, you can go to the newmexicohealth.org location website, and they will give you a list of the dates and all the government orders that were applied and how long they were applied. So tax credits are incredibly valuable because unlike a deduction, which reduces your taxable income, tax credit reduces your tax liability on a dollar for dollar basis. The credit is calculated per employee and is 70% of up to $10,000 in qualified wages per quarter. Qualified wages include the portion of your employee's earnings that you paid and reported on the IRS Form 941. Is this credit taxable? Well, yes and no. The ERC credit is subject to income tax. Wages on the claimed credit must be reduced by the amount of the credit, which results in the credit being somewhat taxable. Reduction in wages may also impact Section 199A, eligible wages for purposes of the 20% qualified business income tax deduction. If the credit is claimed on the 2020 payroll taxes, after the tax return has been filed, you can file an amended income tax return, and it may be required to accurately exclude wages that were reduced by the ERC. But most important, there is no double dipping between the PPP and the ERTC programs. So let me give you an example of what I mean by that. So let's take an example of quarter two in 2020. And this is a theoretical company that just came out of my head somewhere. And I named it the Star Technical Support Small Business. And it's a small business in Roswell. When they compared quarter two of 2020 to quarter two of 2019, they experienced a 55% decrease in gross receipts. So in order to qualify in 2020, a greater than 50% decrease had to have been met. Now the business qualified for the 2020 ERTC. In quarter two, 2020, Star also received $12,000 of PPP. Star Technical Support has 5 employees, and each full-time equivalent employee is paid $8,000 per quarter, and that includes their health insurance benefits. In quarter two of 2020, Star paid their employees $40,000, and that's 5 employees times 8,000. And the ERTC at 50% of qualified wages is calculated as below. 50% times the $40,000 that's paid in wages, that equals $20,000. You need to subtract what was received by the PPP of $12,000, still giving you a credit of $8,000. Now here's another example that it hits in quarter one of 2021 this year. I'm going to call this company, this theoretical company, Fred's Fantastic Car Wash, and they're going to be located in Los Lunas. Now, when comparing quarter one of 2021 to quarter one of 2019, Fred's Fantastic Car Wash experienced a 25% decrease in gross receipts. So in order to qualify in 2021, a greater than 20% decrease must be met. So therefore they qualified. Fred's Fantastic Car Wash, they have 10 employees, and each employee is paid $7,000 per quarter. That includes their health insurance benefits. And in quarter one of 2021, Fred paid their employees $70,000. 10 employees times $7,000 equals $70,000. Now, ERTC at 70% of qualified wages is 70% times 70,000. That's $49,000, with an annual estimated credit for 2021 of $196,000. Now, that was taking into account that this program was going to go all the way through December. It's not. So you would have to reduce that 196,000 by 49,000 in order to get your actual estimated credit for 2021. So here's a comparison between the 2 years. In 2020, you had to have less than 100 employees. In 2021, you can now have less than 500 employees. You had to have a gross receipt decrease of 50% in 2020, and now it's 20%. Your wage credit per employee is 50% in 2020, and it's now 70%. Big, substantial growth in the program, and credits to the small businessman. Now, how do I file? So if your business was not in existence in 2019, you can still use the average quarterly wages paid in 2020. There are some exclusions, and there's also a lot of discussion about this, but you cannot use the owner's pay or the owner's relative's pay when calculating wages. Work with your CPA, because I've seen arguments on both sides of the fence on this, or interpretation on both sides on this. So work with your CPA if you fall into these circumstances. File to apply this credit using your standard quarterly form, your 941. If you want to file in advance, you could have used Form 7200, which is the advance payment of the employee credit due to COVID-19. Because that program ended in September, this form is no longer legitimate. If you haven't taken advantage of the ERTC in either 2020 or 2021, you can file retroactively using Form 941-X, which is the Adjusted Employer's Quarterly Tax Return. How long do I have to file for this tax credit? Well, the latter of 3 years after the original filing or 2 years from paying the tax. Now, again, there's a lot of discussion and interpretation after the impact of sweeping all these funds up from the infrastructure. So again, please work with your CPA to confirm, because these things have and can change. Get professional guidance and support when filing. There's a lot of nuances in this act. There really is, in this ERTC tax credit. So please get advice and help from your payroll expert, and it's preferably a professional who is well informed on current interpretation and laws. Now, while the ERC is certainly a taxpayer-friendly relief provision, the IRS does not give dollars away easily. So they are looking at taxpayer submissions both on the front end and then auditing them down the road. So the best practice is for the business to provide contemporaneous documentation now when first determining whether they qualify. To avoid headaches and heartaches down the road, businesses need to have counsel to properly and fully document and paper how the business qualifies for the ERC. Business owners need to be aware as to whether their company qualifies for the ERC, and please don't miss out on this terrific tax incentive. So here are some of the frequently asked questions. I can't claim ERC if I've already claimed PPP or gotten my PPP loans forgiven. Now you can claim both. Congress in the Consolidated Appropriations Act removed the limitation on only claiming one or the other. PPP will only account for 2.5 times your monthly payroll expenses and is meant to be spread over 6 months. This leaves plenty of uncovered wage expenses for claiming ERC. My business did not have a drop in gross receipts of 50% or more. The Consolidated Appropriation Act has changed the qualifications so that a reduction of 20% now qualifies. But remember, there's also another way to qualify for the ERC, and that is if your business has been subject to a partial or full suspension due to a government order, you can also qualify for the ERTC. You know, my business wasn't shut down during the pandemic. Even a partial suspension order by the government, federal, state, or local, of your business could potentially qualify you. A partial shutdown, a disruption in your business, the inability to access equipment, having limited capacity, shutdowns of your supply chain or vendors, and I think all of us are experiencing supply chain issues, reduction in services offered, reduction of hours to accommodate sanitation, shutdown of some locations and not others, shutdowns of some members of a business are all scenarios that still potentially qualify for the ERC. Now, the key considerations are due to the government-ordered partial or full suspension. It is whether your business is not able to continue its activities in a comparable manner, and did that result in a more than nominal impact on your business operations. Remember, the partial or full suspension is an alternative way to qualify for the ERC separate from the reduction in gross receipts test. Well, my business was deemed an essential business, so I do not qualify because of business suspension. Even if your business is deemed essential, an impact or change in your business may still qualify you. For example, even if you were open, but your vendors were closed down or you can't go to a client's job site, you may still qualify. Or alternatively, if part of your business was considered non-essential and you were impacted by a government order suspension, you may also qualify. You know, my company has grown during quarantine. This isn't something I should take. Well, it's great news that your company grew, But even if your company has grown during quarantine, but experienced a full or partial suspension, there are expenses that may qualify. Sales have rebounded for us in Q1 of 2020. I can't qualify for this credit. With the introduction of the CAA, you have the option to look at 1 quarter prior to determine qualification. This means you can determine eligibility based on lost revenue in 2020. Also, if you were subject to a full or partial suspension, you may qualify regardless. You know, we were in losses or do not have any tax liability. Now, this is a refundable credit, and in practice, this means that any credit overage above tax liability is sent to the taxpayer or the business owner as a refund. My company has grown to over 500 employees, so we are not eligible for the ERC. The employee count restriction is based on full-time equivalent employees, which is a much more involved calculation than just counting heads or everyone in your office. If you paid any employees to not work or to work less than the hours for which they were paid, then the employee count restriction would not apply for those employees. I'm a charity, and the ERC is only for businesses. The ERC also may provide significant benefit to charities, churches, nonprofit hospitals, museums, etc. Charities can be particularly good candidates for the ERC. So let's talk a little bit about the tax part of it, and that's the failure to document. The ERC is a refundable tax credit. It provides robust benefits, as I've talked about. If you had to draw up a tax provision that makes the IRS lie awake at night, and we all want the IRS lying awake at night, it would be a refundable tax credit involving real dollars. As I said, there are a lot of nuances in filing for this credit, so please make sure you work with a payroll professional, make sure you get the full credit that you are eligible for. So let's recap what I've talked about today. What is the process? Well, Congress votes, they enact laws, they provide government funding. Then the IRS, the Small Business Administration, state and local governments, they interpret the law and the tax implications. New forms are created and reporting requirements. CPAs follow the interpretation and provide guidance to the taxpayers. What's the result? Confusion, restating, and clarification. And this goes on for months and is still going on for a lot of these programs. Your 2021 taxes are likely going to look a little different than they normally do. This means you're probably going to deal with situations you've never seen before, including forgiven loans, grants, and unemployment benefits. So keep accurate records. Accurate and up-to-date set of books, such as your balance sheet and your income statement. Track and categorize all your business expenses on both your balance sheet and P&L. Receipts and invoices should be digitally filed and recorded. And again, please keep the originals. Take the time. It's well worth the effort to be able to see where your money is going and ensure you'll be able to get the most of your eligible deductions come tax season. Now, again, please keep in mind, this information is changing rapidly and is based on a current understanding of the programs. It can and likely will change. Although we'll be monitoring and updating as new information becomes available, please do not rely solely on this presentation for your financial decisions. We encourage you to consult with your lawyers, your CPAs, your payroll experts, and your financial advisors. Make sure that whomever you consult with, your lawyer, your CPA, your payroll expert, or your advisor, they are up to date on the most recent guidance from SBA, IRS, or the US Treasury, or all three. So that concludes my presentation for this afternoon. Do we have any questions?
Let me check the Q&A, and also,
Okay.
yeah, don't hesitate to ask any questions should you have them either in the Q&A. I think there is one in the chat that I'll read in a moment, but just wanted to say that you're welcome to raise your hand if you'd like to be unmuted, and I can do that as well. So just feel free to do that. I'm not sure how much of this you can answer, but let's give it a try. What help is available for businesses with subcontractors and not employees?
Can you read it again, please?
Yes, you can hear me okay, right?
Yeah, I
Okay.
just, I'm trying to understand how I can answer this without, yeah.
Got it. What help is available for businesses with subcontractors and not employees?
All right, so that's very, very broad. The only help that I can consider that is that you might look on the SBA website. There's a lot of information out there that can help you and give you guidance. I don't know if you're a small business and whether you have a CPA, whether you do your bookkeeping yourself, but I would start with the Small Business Administration website. That's where I get a lot of my information. That's where I get a lot of my guidance. And that's also helps me ask a question and understand what's going on with the program. So that's where I would recommend you go first.
Thank you, Peggy. And then let me just check the Q&A again and make sure no one's raised their hands. And we are good as far as questions. Thank you so much, as always, for the valuable information, and thank you all for your attendance. And then I'm not sure if we have another slide or two, or is that the end of the presentation at this stage?
That's pretty much the end of it. Yeah, the only is to say thank you to everyone in their attendance. I really do appreciate it, and we both hope that you found this presentation valuable, and in order to give you the right questions to ask your professionals.
And we did just get a great presentation thank you comment, just to let you know, Peggy. So thank you so much. And with that, we'll go ahead and end this webinar. Thank you all again for your attendance. And Peggy, thank you as always.
You're very welcome. Thank you.